Today's show is brought to you by our sponsors at Betterment Advisor Solutions. Imagining a better future is the first step. Investing in that future with Betterment Advisor Solutions is the next. Whether you're launching your own practice, looking to streamline client onboarding, or just searching for efficient ways to scale your firm, Betterment is here to help. They automate to make tax optimization simpler. They provide support to make administrative tasks easier. At Betterment, they're building innovative technology all for anyone who's ever said, I think I can do better. So, grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors. Investing involves risk. Performance not guaranteed.
Hi, everyone. I'm Josh Brown, and welcome back to Live from the Compound. Today, you're going to learn about one of the most important aspects of the global economy, the dominance of the U.S. dollar. We're going to tell you why the dollar's use around the world is so important to our way of life in America and why that dominance might be under threat right now. My guest today is Kenneth Rogoff, one of the most distinguished working economists in the world and a chess grandmaster, just like me, whose career spans academia, international finance, and public policy. Welcome to the show, Ken. So great to see you.
Thanks for having me, and thanks to people for listening.
Absolutely. We never cross paths on the international chess circuit. It's so strange.
I don't know why.
Most of my matches were played on Long Island. I don't know. I don't know. All right. I want to give people some sense of who you are and what you've accomplished, because it's obviously very impressive. You had served as the chief economist at the International Monetary Fund, or the IMF. You were there from 2001 to 2003 in that role, professor at Harvard University. So you are the Thomas D. Cabot Professorship of Public Policy, and you teach economics. And obviously you've been hugely influential because of your books. So the last one, which I read, This Time is Different, I remember how much attention that book got and how much media and how many people had opinions on it, both pro and con. If we could just start by summing up This Time is Different, which you wrote with a co-author. But tell us why that was such a huge book at the time, if you could, and whether or not you knew that it would be when you were writing it.
Well, we worked on it for 7 years, a little bit like this one, my most recent one also. We thought that financial crises were a bigger problem or more recurrent problem than people thought. And one of the early insights we had is they've been going on forever. So Spain had been defaulting in the 1500s. Right. The UK defaulted in 1340. People just think, it never happened before. It's been going on. But I think the thing that we did that was original in that book was most of the earlier books are the Treasury Secretary or the finance minister was so depressed at midnight when they saw they couldn't pay the debt and they called home. And our book had numbers. We put together numbers in a way nobody had ever done before and allowed you to look at the footprints. How does it unfold? What do you look for? And, when the book came out in the early papers, we were mocked because the New York Times had a 2-page spread saying, well, some people think it's going to be bad, but these people, it's just ridiculous. They think it's going to be going on and it's going to have to go on for a long time. But, our benchmark numbers were pretty useful. And one big point we had was that if you have a financial crisis, not like a typical recession, it's a slow recovery. It takes years.
Which is how it played out here.
Which is absolutely how it played out here and almost everywhere. Most recessions, they're terrible, but you actually bounce back pretty fast. And within a year, you're doing better than when you started. I mean, even if we have a recession now, that's a good guess of how it'll look. But if you have a financial crisis, it's much more crippling and lasts much longer.
Yeah, I think what you did with that book was you used numbers to demonstrate how debt either puts you into a financial crisis or exacerbates it once you're in it. And that's why those recoveries are U-shaped and not V-shaped.
Well, I think what it is that our societies don't really have an ambiguous feeling about debt. Yeah. So we don't just suddenly, like in the old days, the British would put people in debtors' jails or worse.
Go to a workhouse.
Nowadays is, well, let's go to court and let's go to court again. Yeah. And that's a large part of why it takes so long to play out. So it's I mean, they happen in every society. That was a really interesting thing, that they're similar in a very autocratic regime, in a regime with a French-style legal
Right.
system, which is different, the historical circumstances. So that was a stunning, stunning finding that we had.
Well, I really appreciated it at that time because that was my first financial crisis that I had ever, I shouldn't say lived through, but worked through. So it was my job to kind of talk to investors who had money on the line in markets that were collapsing. By 2009, when your book came out, we were recovering in the stock market, but not in the housing market, certainly not.
Well, actually not yet.
Okay.
So our book came out in our papers in 2008 and the book in September 2009.
Okay.
And it was, still pretty grim.
Very
in a lot
much
of
in the
places.
crisis. Very
Yeah,
much in the
yeah.
crisis. Okay. Today, the big concern is that there's this international trade war. It's very simplistic to say we started it because obviously we're dealing with issues that have been with us for decades, and it's not any one president. But certainly, the current president wants to accelerate the battle into a full-blown mayhem, and it seems like that's the strategy from the start. And there's a lot of questions about what that means. But one of the big issues here, and one of the reasons why we're able to unilaterally announce we're now in a trade war with 100 countries is because of the dollar and its centricity to the whole system. So that's what I wanted to talk to you about. The premise of your book is that dollar dominance is not a given for the rest of our lives. Since all of us were born and raised, and most of the people watching this, that's the only world they've ever known. It's not the only world that could ever exist. So let's start there as a premise, and then we'll take it further. But what is dollar dominance today, and why is it so important?
So we know English is used everywhere. We're just so privileged if you live in the United States, or some of your listeners weren't born in the United States. It's just such a privilege to have English as the language. And if you have somebody, from one developing country and somebody from another developing country, chances are they're going to speak English. In the European Union, you know what the working language is? English. It's
Right.
not French. It's not German. And a little bit the dollar plays that role. And it's an incredible benefit to us in a lot of ways. So one of the ways is we absolutely pay lower interest rates. Not just Uncle Sam, but if you have a mortgage, a car loan, it's lower because the world is eating up those dollars. They're being absorbed partly into the rest of the world. It's a very liquid market. So that's one thing we have. There are other things we could go on to. But no, it's not a given. So doesn't change very often, the dominant currency. Before us, it was Britain. It was the UK. From the Napoleonic Wars up, even after World War I, when they got really hit hard compared to us, they were still co-equal with us. It was only after World War I and World War II, that they lost it. And before them, there were the Dutch. Before the Dutch, the Spanish.
So let's really zero in on this concept. You've explained that if you're lucky, you get 100 years as the dominant currency. In some cases, it's 200 years, but that's more rare. You went back to the Spanish. So they're pulling silver and gold out of the mines in South America, which gives them the ability to do this pieces of 8 silver coin that everybody in the world believes in. They know the ore exists in South America. They know the Spanish have claim to it.
Exactly.
So they say to them, so it's just this like, all right, we're on the 7 seas. Anywhere that you encounter this pieces of 8, you feel good about it because you know that the country could back it up. The next phase is the Dutch, and they've got these silver-backed florin certificates, and that's basically money.
They had an innovation. They thought of paper. They didn't just have coins. They issued paper, and then that's part of it.
And it's backed, and they know it's backed by something real. And so the guilder is the coin, and the florin is the paper.
The paper, exactly.
Okay. Then it's the British console, and that goes on for almost 200 years. But then something interesting happens. In the miasma around World War I, we end up with like sort of 2 global reserve currencies because that's when the US dollar takes its place alongside the British console or the pound sterling. And you've pointed out that sometimes there are 2 reserve currencies and eventually the new one wins out, but it takes a while, and you can kind of share it. There's nothing that's real. I mean, the euro is not quite a replacement for the dollar overall. It's not dominant in the way that the dollar is, but it's very ubiquitous in international trade. Why isn't the euro being thought of as the thing that could someday replace the dollar?
Well, first, there, even in those history you give, there was a while where the Spanish pieces of aid were still floating around. They were used in a lot of the world, and it doesn't change very quickly.
Shared the stage with the guilder.
Yeah, they shared the stage with the guilder.
Right.
They shared the stage with the guilder, and even for a while with the pound. That people still loved the Spanish pieces of aid. They didn't have the financial depth. I think the problem. So first of all, going back just 20 years, everyone thought the euro would do better.
I remember.
They thought the euro would reach par. Europe was the same size as the United States. Hard to believe these days. I mean, we have just killed it while they've been very
slow. In the year 2000, the United States and the continent of Europe had roughly equivalent GDP.
Exactly. And the stock markets were about the same, believe it or not. Yeah. Nobody knew. And it kind of looked like, they had advantages and disadvantages. They designed their central bank very cleverly, even compared to ours. So, but, then they had this debt crisis around the time of our book in 2010, 2012, and that really shook confidence. So you can point at reasons that they don't have one country. Everybody loves the German bonds. They don't really like the Italian bonds so much. The French bonds are in between. You can point at these things. But I think had the euro crisis not happened, and if they hadn't invited Greece in, they probably wouldn't have happened. They'd have a bigger footprint. They're still 20% of the global economy that they've got. Europe's still pretty big, but they haven't expanded in the way they're not used in Latin America. They're not used in Asia. They're used, but just not the same.
Well, part of the thing is that they found themselves in a fiscal straitjacket of their own making. They were not able to respond as quickly as the United States was, putting aside the central bank. The fiscal stimulus that we did here, I think, enabled us to do a quicker end run to get out of the crisis than Europe could have politically.
Well, yeah, but I mean, the problems, Germany wasn't in a crisis. Greece was in a crisis. Italy was in a crisis. Portugal was in a crisis.
Well,
so fiscal stimulus would have had to give a lot of money to the South, and they gave a lot of it anyway.
Okay.
The other thing I would say about Europe that's people underestimate the importance of is they're not a geopolitical power. They sort of hide behind the United States and have let us spend a ton of money every year. President Trump is right about that. Actually, previous presidents said the same thing, but in a sort of less aggressive way than he has. But we were spending, when the Cold War ended, 7% of GDP. At the end of the 1980s, 7% of GDP. Imagine that. It's down to 3%. And cumulatively spent a lot. But on the other hand, they're not a geopolitical power. And that matters if you want to be the main currency in a lot of ways. Like, okay, an obvious thing is it's harder to invade you.
When you say geopolitical power, military
power.
All right.
Yeah, it's harder to invade.
Is it ironic then that one of the consequences of this current presidential term for Trump is that the Germans are now openly talking about rearming and possibly becoming military power?
It's going to help It's going to help the euro. I actually say that in the book.
Euro.
I mean, I didn't know what would happen, but I say that if they ever built up as a military power, they're going to expand. The other reason's a little more subtle, and again, you can kind of Trump says it really bluntly, but there's all sorts of deals that go on in the global economy about how the IMF works, how the different banking systems work, how are they connected, and we kind of get our way in every deal. Part of it's we're big, but it's also a subtle subtext is, we're not going to defend you if you don't do what we want. Trump actually says that, but you go back to Nixon, you go back to Ronald Reagan, you go back to other presidents. It was there in the negotiation.
There was no Twitter. I've been trying to make this point, and I'm not a MAGA person. I think I'm a centrist.
I try to be.
I aim to be, probably not on all issues, but what I tell people about the way Trump speaks about Jay Powell, and is 1,000 op-eds, the independence of the Fed is under threat. Every president did this. They just didn't do it publicly. They all had an opinion on where interest rates should be. Trump tweets it.
And Nixon recorded it.
Yeah.
So your listeners can go back and listen to the Watergate tapes where he's just chewing out the Fed chair. It was Arthur Burns. You go do this. And Arthur Burns printed money like crazy. He was scared of
Democrats
Nixon.
too. LBJ had a view on
Absolutely.
He confronted Martin
Absolutely.
about where rates were. Okay. So I'm not saying that makes it less scary than the constitutional crisis that could arise.
Nothing new.
Right. Okay. All right. But it's the same thing with the dollar. So Trump says things out loud like NATO doesn't pay its fair share, rather than try to glad hand people behind closed doors, which was probably the Clinton
hasn't
approach.
really worked.
The Obama hasn't worked.
Yeah.
So, and I don't know that this will work, but maybe people don't actually make drastic change until they're really threatened. And I think they feel threatened that they're in between a United States that's less interested in defending all of these countries and Russia, which is as aggressive or more aggressive than it's been in a long time.
You know, I haven't had to use a lawyer really, but what I read is, sometimes you want a lawyer who's an SOB representing you. Then again, if they turn on you, it's not so great.
That's right.
But sometimes you need to bargain very aggressively.
Okay. One of the great, so first of all, the book is called Our Dollar, Your Problem. And I'm going to ask you about the provenance of that title because it's a great anecdote. One of the great things about this book and what makes it so accessible for anyone, not non-economists, this is for anyone to read. You take these personal anecdotes from your life and your travels and you interweave them into each chapter so that people have a little bit better context about how this stuff actually touches people. You tell the story about it's the late 60s, you're playing chess competitively throughout Europe, and you come to this realization early in your life that while everyone is kind of forced to accept the dominance of the US dollar in their lives, in their economies, that's not the same as everybody unilaterally appreciating America. And you tell the story about everyone in a bar singing along to White Rabbit by Jefferson Airplane.
Yeah.
And it's the late 60s. They know every word, even if they don't speak English. But then an hour later, they'll sit at a meal with you and they'll lecture you on everything wrong with America. So our pop culture is a huge export for us. Our treasuries is a huge export for us. The dollar is our gift to the world, but not everybody takes it and says that they love everything that comes along with it.
No, absolutely. I mean, I didn't really go to high school much in high school and was playing chess all over the place. And you get to talk with people and, they knew everything about America, but they had a lot of complaints about it. I mean, we did have all kinds of problems back then. But they love you, but they hate you. And so I think it's very important as an American to understand that. And it's also part of policy. I think some of our presidents haven't traveled much, and I think that's a problem.
Yeah. I wanted to just, as a side note, ask you about that late 60s, early 70s era for you of traveling the globe, playing chess competitively. There was a show called Queen's Gambit on Netflix. Did you watch it?
Oh, of course I watched it.
You had to have watched it.
I had to watch it.
Okay.
I knew the author of the book, Walter Tevis, who wrote the book.
Is that pretty close to, was chess like really the global, like that big of a phenomenon as they show it in the book where they're all celebrities?
It was absolutely true. I mean, when Bobby Fischer was playing in the early 70s, he was on the front page of every newspaper, the big magazines. I would ride in a taxi cab in Spain, and the driver would turn around and go, "Bobby Fischer, loco," because he had a reputation for being really eccentric. And it was actually in the United States, there was certainly an intelligentsia that was interested PBS had their most watched show following the chess matches.
Yeah.
But I didn't tell people in my high school I played chess. I went to a very tough high school.
Right.
I was scared to seem wimpy or something.
Okay.
And it wasn't until I, just was in the newspapers all the time and they found out. But then I'm playing in Yugoslavia and I go into a bar and they go, "Why did you play so stupid today? I bet on you." And it was just wonderful. I mean, to be accepted that way.
It's a really cool thing that there was this era, and I think kind of video games came along and replaced the interest among young people for chess. I think that's like part of it.
Chess is having a really good period. So
now it's having a little bit of a renaissance.
Yeah, absolutely. No, it goes through cycles. It's in a good phase now.
Okay, so
I wanted to add one other thing about
please.
that. I certainly also learned about life because I was making money playing chess. In fact, I didn't earn as much money as an academic till my mid-30s, which is partly saying how little you earn as an academic. But I wouldn't feel comfortable going into hotels and spending money. I would sleep in train stations, on park benches and stuff, and learned a lot about life, I think, from having done that.
So here's where I want to go next. I asked you about chess because one of the recurring memes of this era, mostly people mocking Trump's aims in the trade war, or some of the things being said by the Commerce Secretary, the Treasury Secretary, they derisively refer to it as 4D chess. Is the Trump administration playing 4D chess in your estimation as a former traveling chess phenom? Is that what you think is going on, or do you just think it's ideological and it's not strategy?
Trump is right about many things. I tell my students who think he's wrong about everything, how can he be wrong about everything? You'd have to be a genius. If I gave you a multiple choice test and you missed every question, you must know the answers. Like, he's not wrong about everything.
Right.
I think he's wrong about this. If he just put in a
wrong about the problem or wrong about the solution?
Both.
Okay.
So let's start with the problem. On the one hand, people are selling more to us than we're buying from them. That doesn't sound good. But on the other hand, people are putting a lot more money into the United States than we're putting into them. And it's building factories, it's bidding up, the United States has just dominated the world the last 20 years. Okay, we could redistribute income better, we could do some things better, but this has not been a disastrous period. We are the envy of the world. So I would say the problem's not, there are periods, sometimes when you run a trade balance really fast, it's a problem. That happened in the early 2000s. I was writing about it. Alan Greenspan was saying, no problem, everything's good, our financial markets absorb it. And I got to speak after him, on an occasion and disagree with him. Of course, everyone had disappeared by that point when I was speaking. But yeah, there are times it's wrong. But it's really his solution that's so, nuts. If he just put a tariff on 10%, actually, I would come on and speak to you. No big deal. It's a tax. I don't like taxes. Maybe it's not a perfect tax. But he could cut some other taxes, look at the whole package, and say, okay, I wouldn't do it that way, but okay. We have worked on this as economists, trying to quantify how bad it is. It's just not that bad. We're a big country. We don't really import that much. It's 10% tariff, not a bad idea. The problem is this let's make a deal, absolute uncertainty chaos, which for him is part of the object of it, I think.
I think so, too.
It creates so much uncertainty, for someone who's an importer, for someone who's investing. He's just wrong on it. We can go in circles about it. But if he would retreat, it would be better.
The chaos serves one very specific aim of his, which is to be the center of attention and to be the person that everyone has to come to and plead with. And I think he's smart from the standpoint of, if that's your goal, he knows how to accomplish that goal. He's got the CEOs of the top companies in every industry, from not just all over America, but all over the world, calling him, taking meetings with him, begging him to see reason or tailor what he's doing specifically so they could have their own loophole. He's got Tim Cook coming to him and saying, here's what I need. Please, can I have it? Might not use the word please, but that's the implication.
I couldn't say it better than you said
okay.
it.
So he likes that.
No, he likes it. But I mean, after a while, at some point, you have to deliver results. And the results he's delivering are not good. He says it'll all be better. I think the thing, I just don't really get what's on the other side of this. It could be, I could draw out a map where he just everything we want. But, I was just in the UK and sort of, it hadn't quite dawned on me till it was there. They were putting free speech as free speech. The UK didn't have good enough free speech. It's different than ours. This is the Magna Cartas from the UK, the birth of modern, liberties there. So, I don't, you described it well. I can't. But if he would retreat from this, he would have a lot better 4 years, and so would everyone else.
One of the reasons for the uncertainty is that there is no clear aim. So if you have a trade war and you say, my ultimate goal is for these other countries to drop all tariffs completely, and once that happens, we will do the same, and free trade, and I'm a free trade ideologue, and there should be absolutely no protectionism anywhere, and that's the goal. Okay, probably you don't get it, but at least people understand what the end game might be. When you come out and say there are tariffs until the fentanyl stops crossing the border to one country, and you say to another country, I need your media to give more voice to the right wing. And then you say to a third country, no, this is just about autos. And then a fourth country, we want to sell you steak. People look at this and say, okay, so in other words, the tariff is just the place setter so that when Trump meets with his counterpart in country A, it's just about getting something. It's not about getting to a specific economic deal.
And so let's come to the dollar. That's our Achilles heel here. So when Trump came in, our debt trajectory was already looking pretty shaky. It had looked okay to many people when interest rates were super low, but once interest rates, in my opinion, had normalized more, then suddenly our interest bill was exploding. It's more than doubled in a very short period. And suddenly you can't just think everything's free. And that idea, which was very prevalent, not just on the left and parts of the right, but also in academics, that was a very popular idea. And, a lot of people held it, a lot of smart people. It's looking pretty dubious right now already. That is our Achilles heel, because if the dollar blows up and we run into debt problems and have to inflate, that's going to push people out of the dollar. And then if suddenly people stop liking us as much and add even more interest to that interest going up, that's happened recently.
I want to make sure people understand what you're saying. So effectively, people are willing to take the U.S. dollar as payment in trade and hold the majority of their FX reserves in dollar-denominated assets like treasuries or dollars themselves. They're willing to do that because there's this implicit bargain that in exchange, the Federal Reserve will not allow inflation to inflate away the purchasing power of those dollars. So that's what's under threat. That's what's under threat now. One of the things that's under threat now. We were able to get off the gold standard because people were willing to just take our word for it. We have the most powerful military in the world. We have one of the most dynamic economies, and we promise we won't inflate away the purchasing power of the dollar. And people said, great, I'll hold my assets in dollars.
Let's pause on that.
Okay.
Not right away. I mean, so I'll go to the title of my book, Our Dollar, Your Problem. Dollar used to be as good as gold if you were a government. So, the individuals, it was in the early 1930s, you couldn't get gold for your dollars. But if you're a government, you still could. And so the whole world was built on the premise that the dollar was good as gold. But we had the Vietnam War, we had the Great Society, we started having creeping inflation, we started getting challenged by the French and others, started turning in their gold, and Nixon finally said, no more. Dollar's not,
you can no longer bring a dollar to the window and get its equivalent value in gold. Now you just have to go along with us because we say it's good as gold.
Well, or not. I mean,
Was that 71?
So that was in 71. And so he sent John Connolly, who was the Treasury Secretary back then, a very larger-than-life Texan. He went back to confront the big leaders from all over the world, Europe, Japan, Canada, and they go, what are we supposed to do? Like, we're holding a ton of dollars, just like the Asian central banks are today. And Connolly said, I'm paraphrasing it slightly, it's our dollar, your problem. And of course, it was our problem because we didn't really have a plan ourselves. Right. And we had all this inflation in the 70s. It was terrible for most Americans. It was a really low growth period. Why the title speaks to me is, first of all, the irony. It was our problem too. We didn't recognize that. And right. You can talk about that with the trade war. It's worse for the United States than anybody.
Right.
And, second, it's something that captures the arrogance of the United States. And I don't want to say I'm very proud to be an American, but sometimes I hear this arrogance which doesn't have a sense of humility, and we make mistakes. And I feel uncomfortable with it. Maybe you don't, I don't know. But that it spoke to me. And so that's why I chose.
It's a very evocative statement to make, because that's not what America is really riding high in that era. To your point, we're about to capitulate in Vietnam. And we've got civil rights issues that are only a year or two in the rearview mirror, if at all, that were ugly in the eyes of a lot of the world. And to sit in front of foreign finance people who were worried that all these dollars they're holding are about to be inflated away, and say it's our dollar, but it's your problem. I think it's a brilliant title for the book.
And it sunk the dollar.
Yeah.
That was a period dollar dominance had risen to a peak, and it went way down after that.
Yeah.
It only started building up when the Fed figured out what to do under Paul Volcker in the early 80s. We had really high inflation. He raised interest rates, the short-term interest rate, to almost 20%. Can you imagine, Powell had to do that? And I worked at the Federal Reserve back then. I was a junior economist, and there were people, marching on the Fed every day, car dealers mailing in 1 million keys of cars they couldn't sell, builders sending in 2x4s for things they couldn't build. It was chaos there.
Yeah.
And Volcker really stood his ground. And
you may never have a Fed chair again who's got the guts to do something like that to break the back of inflation. It'd be very hard to convince a president, you're going to have to sacrifice your term so that I could do this, and have the president say, yeah, sure, no problem. This is why Carter is a one-term president.
Why Carter was a one-term president.
Right.
And by the way, our debt back then was 30% of GDP and not 120% of GDP.
Right.
So when he's raising interest rates and it turns over on all the debt, it's quite a headache to do today.
Here's something the Trump people will say publicly, or they won't quite say it, but they'll hint at it. But it might be true. Okay, you don't like what we're doing. You don't like the trade war. You don't like to have to negotiate one-on-one with Donald Trump. What else are you going to do? Meaning the renminbi is not going to become the world's reserve currency. It may become Russia's reserve currency or Iran's reserve currency, but it's not going to become the reserve currency probably in Europe and probably not in Latin America either. You've got gold. You've got Bitcoin. You've got the euro. But like in the end, what things come back to is we have the technology, we have the market dominance, we have the biggest stock market, we have some of the highest per capita incomes, we've got the military. It's really hard to imagine a scenario where the dollar completely loses its dominance to one other currency.
It won't.
Okay.
But we could lose a lot of the advantage. So think of market share. Our market share rose a lot after the financial crisis, believe it or not. I would say in some ways we caused
market share of global GDP.
Market share of global GDP, but market share of, for example, how much trade is in dollars, market share of how much financial instruments are in dollars. The dollar exploded. No, it didn't have to happen. Europe yes, nobody in New York's going to be using the euro. But you said Latin America and Africa. Oh, believe me, they use the euro some already. They'll use it more.
Okay.
They'll hold it more. And the renminbi, we think of them, who wants China to know anything? There are a lot of African leaders and Latin American leaders, South Asian leaders who trust China more than the United States. Maybe they have human rights abuses or something, or a civil war going on. And it's not just Russia, it's a lot of the world. And so as our market share shrinks, and it could shrink a lot, our interest rate will go up. We'll have less security. We didn't talk about that, but the dollar dominance lets us see everything going on in the global financial system because it passes through the U.S. because we make the rules.
Yeah.
And the Chinese want to change that. So I thought that was coming without Trump. When I wrote the book, I thought if Harris won, I mean, obviously, who could expect exactly what happened? But I thought we'd get another burst of inflation the next 5 to 7 years. I thought China would continue breaking free. I thought Europe might expand its footprint. So I saw I thought dollar dominance peaked 10 years ago, not just today. When Trump entered the scene, it had actually fallen quite a bit by some of the measures I use. And he may have accelerated it a lot, but it was coming. I mean, these things don't happen overnight. They're not sudden, but we were headed in that direction.
So in a world where the dollar loses market share and the United States loses some of its dominance in some of these international endeavors, what does that mean for the everyday U.S. consumer? Lower price earnings multiples for our equities, lower valuations for our small businesses, higher borrowing costs, more volatility in the prices of things. Like, these are the negative externalities of a world where we're headed in that direction.
Yeah, it's sort of death by 1,000 cuts. It's not necessarily one big
It's not
thing
an event. It's a mentality that takes over.
Well, for example, if you're a medium-sized business in the United States, you can borrow abroad if you want to. There's no other country where that's true because people want dollars. And if you have dollar income, they'll take you. It's going to affect mortgage rates. You'll see it when we have another crisis. I'm sure something will happen. I mean, I don't want to sound dark, but we had the pandemic. We had the global financial crisis.
It's every 7 years.
Yeah.
Sure.
I would say a recession every 7 years, but right now it seems like even more things happen. Yeah. And when it does, if you look at those events, you mentioned already, the U.S. borrows twice what everybody else borrows, 3 times what everybody else borrows.
Right.
Everybody else is looking in, disbelief.
Because we haven't had the consequences yet.
We haven't had the consequences.
Right.
But as our debt moves up, as the dollar dominance moves down, and we try to do that, we'll get blowback faster, and you'll feel it. So I think, that's when we'll really be put to the test.
Yeah.
Maybe sooner than that, by the way, but some crisis. And will Federal Reserve independence survive that situation? Okay, forget about Trump. Anyone who's president, and they would like interest rates to be lower. There are other tools besides inflation. So, it's definitely something where once we've lost it, we'll wish we had it.
Do you view the decline of the dollar's dominance as inexorable, or because one of the things that you do in your book, which I found really effective, you point out these turning point moments where things might have gone differently. In your mind, is this just a question of degree or a question of how long it takes, but it's going to happen no matter what? Or are there off-ramps, and what are they?
Well, there's definitely an off-ramp if we just govern ourselves unbelievably well and suddenly
so that's probably not going to happen. What else? What else can we? Any quick fixes in mind?
No, I would definitely preserve Federal Reserve independence as long as you can.
Okay.
But that's easy to say and not as easy to do in practice, and both sides have problems with that. So no, there's not an easy off-ramp.
Has the Federal Reserve earned the amount of independence that they demand? And I know it's in the Constitution. And I understand from 1913.
It's not in the Constitution.
Oh, sorry, you're right.
People
think it is, but it's
Congress could put the Fed out of business in a week.
What's in the Constitution is that the president can't unilaterally remove the heads of certain agencies, without Congress weighing in, but
Well,
not the Fed specifically.
It's in the congressional. I don't know that the Fed's
Okay.
embraced in there at all. I'm not
Okay.
a lawyer, but I think that if the president had Team Congress completely behind him, they could make it disappear. The Fed actually, they have this incredible building in Washington. Have you ever been there to the Federal Reserve?
I have not. I've seen from outside. I've not been inside.
It's really impressive looking. My thesis advisor, Rudy Dornbush, who's a great man, said central banks have to have really expensive, over-the-top buildings so they look like money. So
pillars.
They feel like
there
money.
have to be pillars.
So they didn't have that building when the Fed was formed. They didn't have it till the mid to late 30s.
Yeah.
They had a little room in the Treasury. They
Yeah.
can get stuffed back into that little room in the Treasury
Yeah.
if Congress wanted. And by the way, the progressives have all these ideas that are not as out to lunch as you think of a future of stable coins and central bank digital currencies. It's going to suck money out of the banking sector. It's all going to go into treasuries, even in treasury-backed stable coins. And they say, well, great, then we will decide how to lend the money. It won't necessarily be in the private sector. So there's a lot of pressures coming on Federal Reserve.
From both sides.
Both sides.
Yeah.
Both sides. People who think Trump causes everything, it's us. It's our, both sides have these visions of what they want to do. They want to use the Federal Reserve for their own purposes.
Yeah, I think there's a wing within the progressive side where they want to abolish the IRS, but not for the same reason the right wing does. They actually want to just tell you what taxes you owe and have it be automatic. They don't want there to be any negotiations or any professionals sitting in the way of that. Social credit systems where do you believe in the right things? Do you say the right things on your social media? Great. Therefore, you get more credit.
There's a Black Mirror episode about this.
You get more credit for supporting the quote unquote right side, and the other people that don't agree with us, they get less credit. So there's all kinds of paranoia. But I guess my original question, there's so much of an outcry. He better not dare fire Powell. And I'm in that camp. I like things the way they are. Probably because I'm 48 years old and I have a family. I'm not looking for disruption. But there are people who would say, look at how ridiculously we careen between disinflation, huge inflation during the pandemic, all these mistakes along the way about not watching over the banks. The Fed was the regulator of the banks leading into the financial crisis. Look how badly they screwed up COVID. They thought it was supply chain. They thought it was transitory. It was about the labor market all along. Has the Fed really earned the level of independence that they currently enjoy?
Let me tackle two parts of this.
Because they are not popular.
At first,
the Fed is not popular
I
nationally.
actually wrote the first and most influential paper on central bank independence when nobody had independent central banks. So
Okay.
I'm talking my book here to think it's a great thing. But I think it's worked very well all over the world, having independent central banks, even in countries with dubious governance. Now, have they earned it? I always ask myself, could I have done better? And I think something I get from chess is when I was a kid and, getting good fast, but, I would look at a game and somebody who was really good would be playing against Bobby Fischer on move 33. They did something dumb. And I'm going, I could beat them.
Right.
And when I started playing
One
them,
mistake and
when
you're
I started playing them, I realized, wait a second, I couldn't even get to move 15, against Bobby Fischer. And you look at the Fed's mistakes, you have to look at all the things that they did right, along the way. And I asked myself, could I have done a better job in real time? And I think, Bernanke, Powell, for the most part, Greenspan, I can't say I would have done better, and Volcker certainly not. So there's some people who say, well, we should go back to gold. That's a popular thread in conservative thought. The Wall Street Journal will publish pieces by those who think that's a great idea. That's worse than Trump's trade policy. I mean,
because it's more restrictive.
Because you can change your mind. It's right. Not like some computer programs forcing it on you. It never lasts. That's what the problem is with the gold standard. And it's like you set up all these landmines when you walk out of it, and then you have to step on every landmine when you do. Yeah. So yeah, they're not perfect, but it's worked. The last 20-25 years, even in the United States, maybe since the 90s, it's worked pretty darn well. Not perfectly, but some of this is also forecasting the mistakes. Like the progressives like to say, oh, we should have spent so much more money to come out of the financial crisis. Not if you had the IMF and the Federal Reserves and the White House's forecasts. And then in the pandemic, I mean, I don't know about you, I thought it was going to be worse than it was. And I think
I definitely did.
A lot of the forecasts did. So if you thought it's going to be worse, you'd keep the interest rates lower, you'd spend more. And then everybody says, what freaking idiots that we had inflation. What freaking idiots. Well, you didn't know, what it was going to be. So yeah. I like to ask myself, like I did when I was a chess player, don't just look at move 33. Look at the whole game they played. Would you have done this? Would you have done that? And it's been a pretty good system.
Okay, so I wanted to kind of conclude by asking you if there were to be a new medium of exchange or currency on the scene that could do a lot of the things that the dollar does, but maybe not have all of that baggage. There are a lot of people who genuinely believe that would be Bitcoin. It's decentralized. It's native to the internet. It doesn't require there to be a military backing it because it's not sovereign. There are a lot of aspects to, I wouldn't say all cryptocurrencies, but to Bitcoin specifically that that make it unworkable. Like you can't do the amount of transactions that you do in dollars in Bitcoin, even if you had 1,000 years to get a year's worth of transactions done. So a lot of things about it that are unworkable, but is that concept something that's not owned by any one country, but that's internationally accepted? Is that probably where the real challenge to the dollar comes from? Because it seems unlikely to me that it's going to come from another country's own sovereign currency, if there's any challenge at all.
Well, I think the challenges are going to come at the edges from China and the renminbi. That is where the challenge is. But crypto, first of all, it already does challenge the dollar in the global underground economy. People are avoiding taxes.
Sure, of course.
Well, that's probably 20% of global GDP. That's my estimate in the book, and I think consistent with a lot of other people's. That's as big as Europe has. I mean, that's a pretty big slice of the pie. So Bitcoin and more derivatives.
The black market, the non-recorded transactions are 20% of the economy?
Yeah. In Europe, it probably averages, and even in Germany, it's probably 15%.
Wow.
In France, maybe a little lower. In Italy, it's like 1/3 of 30%, and Greece even more. And then you go to India and China, it's even more than that. So already, that's a big thing. By the way, in trade between China and Russia today, of course, cryptocurrencies are being used as part of it. But it's very hard to replace the dollar or a fiat currency in legal transactions. So there are a bunch of reasons. One is Bitcoin's very volatile, so there's some purposes it can't serve as well. But I would say a bigger reason is the government makes the rules. And there's a very nice passage in Harari's *Sapiens*. He's got a few chapters sort of saying, well, if everyone thinks Bitcoin's the currency, or he doesn't use Bitcoin, then that's the currency. No. That's just wrong. The government can make the rules of what banks take. They can make the rules of what you pay your taxes in. They can make the rules of what they pay their suppliers in. This creates network effects. They can make it hard for you to do
And Bitcoin doesn't have a government that can do that.
Bitcoin doesn't have a government. What they do have at the moment, and this is a critical area, is a big infrastructure around it. Things like Coinbase that are really banks. They're just banks. They have a lot of bells and whistles.
They're holding currency in the end.
And you can do transactions. And
right.
a lot of when we're talking about Bitcoin being used, maybe 95, even 98% of the transactions are like that. That can be regulated. I mean, Trump's saying he doesn't want to, but that can be. And so the government has a lot of control over this. So what I say is, the private sector innovates, but the government eventually regulates and appropriates. And so if the government really likes Bitcoin, we could have something like it, but I suspect we will have a central bank digital currency. It might be around stable coins, definitely, relatedly, but I don't think it's going to be Bitcoin, except in the underground economy where you can't control the on-chain transactions.
So one of the things, back to *Sapiens*, one of the ideas in that book is the idea of a legal fiction. And I think he uses the example of Volvo as a legal fiction. Everyone agrees that Volvo exists, but it's not naturally occurring. It's all paperwork. There's an article of incorporation. There are people who work there. They get paid a salary. We all kind of agree that Volvo is a thing because it's a thing. And if enough people believe that it exists, then it exists. I think Bitcoin is headed to that place. I'm not like a Bitcoin lunatic. I own it, but I'm not like an evangelist. But it's headed to that place where if enough people believe that it's real, that's all you need. And you point out Coinbase. I would point to the fact that belief in or advocacy against cryptocurrency became one of the most important factors in some local elections, specifically in Ohio. They threw the senator out because he was anti-crypto. The person came in, wasn't pro-crypto, just not against it. And that was good enough. They raised enough money in super PACs that they were able to replace somebody sitting in Congress. It's just starting. So I don't know that there's an organized anti-crypto front. I know that there's a highly organized and well-financed pro-crypto front. And that might be enough so that it gets to the point where it's a legal fiction and it's got a widespread enough base of belief that it does become legitimized.
Let me challenge you here. I mean,
Okay.
I think it'll be around forever. So I don't hold with Jamie Dimon and Nouriel Roubini and Paul Krugman who say it's going to be worthless. No way. Not unless everybody, there's no underground economy anymore. But in the legal economy, it's not gonna stay at a big level. We're gonna have a crisis in the crypto. We did already with
I think
FTX.
we have one every year.
We had one with FTX, but
Yeah.
as it gets legitimized, it goes into pension funds, it goes into insurance companies, and we're going to find out we have to regulate that banking structure.
Yeah.
And regulating it's going to mean know your customer, see everything, and a lot of the appealing things won't be there. So, I mean,
So
I might be wrong.
having BlackRock, the world's largest asset manager, having their fastest growing product be a spot Bitcoin ETF, having Fidelity now banking crypto alongside stocks and bonds for regular Americans, a lot of boomers. Robinhood's got 30 million users. I think 85% of them own crypto. That's the next generation of investors. They treat crypto just like they do any other asset class. They diversify with it. I feel like it's crossed over. I mean, you seem more skeptical than I do.
We go through cycles in these things. I mean, stable coins, I think, will come out at the other end.
Okay.
And Bitcoin will always be there. But I don't think it's going to expand outside the underground economy.
So Bitcoin is not the next dollar.
Bitcoin is not the next dollar. It's a thing, but it's not the next dollar.
Okay. I've taken up a lot of your time. You've answered so many of my questions. I absolutely loved your book. I just wanted to say thank you so much for joining me. And I want to tell people they can get this Amazon, Barnes & Noble, bookstores everywhere. Yes?
Yeah, of
Okay.
course.
And of course, they can follow your writing as I do. You're about once a month for Project Syndicate. I've been reading your stuff over the years, and I've learned a lot as a result. What else are you doing these days? Do you have a whole promotional blitz for the book, or where else are you popping up next?
Well, so I spend a lot of my time on research. I mean, and so, there are parts of the book about what's going to happen to China, what's going to happen to real interest rates. When I talk about the dollar's footprint shrinking, that's a big research project to think about that. So actually, that's what I spend most of my time doing. And it was really fun to try to put it into this book and pull it together, put in the life to lean into my age, that I've seen all these things. I've met with all these world leaders and these policymakers. But yeah, a lot of my time is sort of spent, with a pencil and paper and trying to do stuff.
I think you have a nice balance. You have all these great life experiences at very high levels. You've met a lot of important people, and then you've got all this time that you've spent researching. And I think both sides of your life come through in the book. And I sped through it. I loved it so much. So I can't recommend this enough. It's called Our Dollar, Your Problem. Guys, thank you so much for watching, listening. Ken, thank you so much for your time. Really appreciate it.
Thank you so much. I wish I could have you with me all the time explaining what I'm trying to say.
Let's go sell more books. All right. Thanks again. Thanks for watching. We'll talk to you soon.